but I came back.
Hi, everyone. Welcome to the 127th episode of the Timing Research Show for February 27th, 2017. My name is David Kosmeter. I'm the creator of Timing Research. Today we will be discussing the 179th weekly report. So if you haven't had a chance to take a look at this yet, just go to TimingResearch.com/reports, and you can download this or any of the past reports there. I have Matt Buckley back to host today, so I'm going to go ahead and turn it over to him.
Thanks, David. Appreciate it. Got another all-star lineup here. We're still waiting for Barry Burns of Top Dog Trading to check in here. I got my partner, JT. As everybody knows, is a mad hedge fund trader. I'm surprised it's not the Donner Party in there. Captain.
Well, we're actually getting a rare week of no rain, a chance to dry out.
Oh, okay. Yeah, I was wondering if those drapes were you guys got snowed in. Didn't you have like 9 feet or 20 feet recently or something?
28 feet in January.
Oh, God. So JT is not having to eat anybody in the Donner Party, so he's alive. AJ Brown of TradingTrainer.com and Anka Metcalf. This is going to be a really quick one today, guys, because there's absolutely nothing to talk about this week, right?
Zero until the State of the Union.
Yeah, exactly. So in 24 hours, I guess. But so awesome. Welcome aboard. As David said, my name is Matthew Buckley. You guys can call me Whiz going forward. And I'm the founder and CEO of Top Gun Options. Ran about a $2.5 billion vol arb firm up there in the Board of Trade a little while ago, and then decided that Chicago winters were best left for people other than me, and headed down here to South Florida, where Top Gun Options has been in business for about 7 years. Also run the Mad Hedge Fund trading option service over there with JT, which we can get into in a little bit. But since Barry hasn't shown up, I'll tell you what, JT, then AJ, and then Anka, why don't you guys give us a little bit of an executive summary about yourself, your background, and then how you got to where you are right now and what you do.
I'm John Thomas, the Mad Hedge Fund trader. I'm old as dirt. I'm on Medicare. I only wear these glasses because they make me look smarter. At least to some shallow people think I look smarter. I think the error on the Academy Awards last night was totally set up because they had all the camera angles prearranged. So my faith in Hollywood is now diminished. We run a global long-short macro strategy, stocks, bonds, commodities, currencies, precious metals, and real estate. We give out about 250 trade alerts a year on all asset classes. A lot of them are stock specific. We just took profits on Apple, Palo Alto Networks, Goldman Sachs. Having a record year, up 17% so far this year. And that can be your performance too. All you have to do is sign up with us.
Awesome. Okay, AJ, how about yourself, man? Your background and what you're doing right now.
Hey, this is AJ Brown, and Trading Trainer is my claim to fame. We've been doing education on equities and options since 2003. Started trading on my own 1997, and have always been a man of the process. So it's not so much what bells and whistles, but so long as you follow the process. We're launching something called the 6% protocol in a month, not even a month, a couple of weeks here. That is my new focus on things, is taking the marathon, not the sprint race. And other than that, I agree with John on the whole Hollywood thing.
Yeah, especially Warren Beatty, known for a little bit of his practical jokes there. That was an odd moment. And Anka Metcalf, welcome to. Are you finally down here in South Florida, Anka? I know you had lunch the other day with Susie and talked about some good stuff. So welcome aboard, Anka, and tell us about yourself.
Thank you. Not quite yet there, but I think I will be down there probably April 10th or so. So I'm counting the days. I'm really looking forward to some sun.
Oh, yeah.
All right. So a little bit about myself. No, I did not watch the Oscars last night. Okay. All right, so a little bit about myself. I'm a professional independent trader that is focused on equities and futures trading for the last 14 years. Prior to becoming a professional independent trader, I have 10 plus years experience in investment banking, and I've done that in Europe. I'm also the founder of CEO of TradeOutloud.com, which is a trading education firm specialized in educating individuals how to day trade and swing trade equities and futures, day trade and swing trade as well. And I'm the designer of an institutional proprietary trading system that is based on price support resistance, specific trigger times, specific price zones of reaction, obviously chart synchronicity, a strict set of trading rules, and a 10-point scoring system that enable myself and my students and all my followers to pinpoint trades with maximum accuracy. That's about it.
Awesome. Great. Looking forward to hearing all about that stuff. And still doesn't look like we got Barry, so hopefully everything's okay with him. We'll just go ahead and press forward. Folks, all the traders that you're hearing from today, obviously decades, and throw John in there, we'll say centuries of experience. So we've all read the report. We all read your responses. Now it's time for you to get ours. So question one, over to John. Now I know we're probably going to meander in and out of these questions as they go back and forth. Let's try and go. Let's throw 1 and 2 together. JT, AJ, and Anka. Which direction do you think the S&P 500 is going to move from our open to Friday's close? And give me your delta. What's your probability? So higher, lower, and what's your delta?
Yeah, I would say down by Friday. 70% probability. It's all on the State of the Union, which we don't get till Wednesday night. So we really only have 2 days to react. You know, depending on what he says, you could get an up small and then a down, or just a down big straight out the door. You know, if we get specifics on tax proposals and budgets, then we could rally. If we just get more words like huge and wonderful and fantastic, then I think traders have had enough. They'll take profits and wait for more detail. You know, we're now at the point where investors are saying, where's the beef? You know, we've been hearing promises for a year and a half. You know, we're now over a month into the new presidency without a single substantial fact on anything. And, you know, without more substance, you would be fired as a trader buying the market up here. Up 12 days in a row. Yeah, people will just do nothing. You know, they'll either do nothing or they'll sell. The buy story is pretty much run its course until we get more fundamentals.
All right, so John's down with a 70 delta. AJ,
I'm also down, and I'm going to add to John. I definitely agree with everything that he has put forward. I also want to say that you know, watching. I always believe that the leading indicators that pop up should be taken as triggers to look for lagging indicators. And so we've got a ton of leading indicators on my radar, everything from implied volatility going up even though price is going up. You know, you've got your advancers and decliners. The decliners are outpacing advancers. You've got all kinds of different, even volume is dropping. There's doji bar after doji bar. So there's a lot of uncertainty. And, you know, generally I would tell everybody that you wait. You wait until you get some sort of lagging indicator telling you that things are reversing on you. But the truth of the matter is I think we're going to be down next week. I'm going to give you a 65%.
All right, so AJ is down with a 65 delta. All right, Anka.
All right. I like what John just mentioned earlier. If you're a trader, you would definitely get fired if you buy this top right here. Everybody's not committing to the upside or the downside right now. I think we're waiting for tomorrow night to see, you know, for more clarity, obviously. And I think that fundamentals are going to play an important role here right now. So far, we have a support level of 2350 area that we have established, and we have been hovering here for quite some time. time. And I think that if we break below that area, obviously there is room for a correction. I would feel very much comfortable of correction all the way into 2300. I would love to see that 2300 or 2280 area test before I get into some long positions. But right now there might be some isolated trades that are pushing a little higher right now, but I really don't believe in a longer term push to the upside. So I would say 70% for a correction. And I think that like I said, the line in the sand is going to be established tomorrow night. And we do still have a lot of releases that are due until then. We have consumer confidence, which is tomorrow at 10 o'clock. We also have Friday's ISM non-manufacturing PMI, and we have a lot of things that are, plus Federal Chair Yellen that is going to speak on the 3rd on Friday at 1 p.m. So we have a lot of things that are going on this week. I think the main thing is going to be tomorrow and establishing probably a direction for this week, whether we're going to go for a correction or for another little bubble to the upside. So like I said, 70% to the downside for a correction.
Awesome. Okay, Anka gets, so we got 3 downs and 0.7, 0.65, and 0.7. Usually as the host getting to go last, I take advantage of saying you're all wrong. But in this case, I'm actually going to allow you all to be right. For just about everything that was said, and I can add all my 2 cents here, but I'm actually going to go to about a 0.85 delta. There is that slim snowball's chance in hell that he knocks the cover off the ball, and this rally that has been pulled forward goes, oh, okay, well, it is huge, and they believe it. There's a 15% probability of that happen. That's the March Fed Fund futures rate of the rate increase. It's not going to happen. So I'll give you my reasons as we go through the second round here. You guys all sprinkled some of the reasons in there. So I'll stay pure to being a host. But let's go to the top of the order then, JT, and say, all right, you said down with a 0.7 delta. State of the Union tomorrow night, Tuesday night, not Wednesday. So give us a little bit more color and clarity, John. You and I talk almost daily as partners and traders, so I know exactly where you're coming from. But give some of that sanguine this week meat to these folks.
Well, it's actually much worse than it looks. 20% of the move in the Dow has been in one stock, Goldman Sachs. Okay. And although I think Goldman Sachs could double from here over the next 3 years, it is the textbook definition of extremely overbought. And in fact, the last couple of, the last month, really, the market has shifted between being overbought and being extremely overbought. And that is a very tough market to trade. Fortunately, we've had offsetting trades. We went long bonds, then we went short. We played in the
Hey, John, real quick, you and I talked about this the other night, but isn't it funny how, so Goldman has 4 heavies, 2 cabinet folks and 2 administration heavies. As soon as they left, there was articles out last week from Goldman. 3 things are about to derail Trump fiscal plan, Goldman warns. And Goldman, investors will soon realize they were too optimistic. So it's funny that the best performing stock on the Dow, like you pointed out, is trying to throw cold water on themselves or the market.
Well, we basically have an all Goldman Sachs, all oil government. Mm-hmm. And if you're in those 2 industries, this is like the golden age. I'll throw the coal industry in there. I saw the head of a coal company on TV the other week, and he was crying tears of joy. But if you're in healthcare or in retail, you're about to get destroyed. And my bet is that the job losses in healthcare and retail will exceed any jobs created in banking and the oil industry. Both are subject to artificial intelligence cutting job requirements massively. So my bet is that we see a net loss in jobs overall from the president's new policies, but it may take a year or 2 to actually see that in the data. Throw a trade war in there, you lose all our agricultural exports. So I see another 6 months or so of euphoria, and then when reality sets in, one of the greatest short opportunities of all time will set up.
Yep. Great points. And I'll probably second some of those. Barry, did you check in?
Yeah, I'm here. Can you hear me now?
Yeah, I got you loud and clear. Welcome aboard, man. We're just getting through question one here. So do me a favor. Why don't you give us a little bit about your background, what you do right now, and also get right into question one there is where do you think we're going to close on Friday, higher or lower, and your percent probability. So go ahead.
Great. Well, thank you very much. Yeah, I'm sorry I had a little trouble logging in here. Well, what actually happened was my hard drive on my computer crashed over the weekend. And so, well, of course, that led to all kinds of problems. So I had to get a new computer and trying to get this thing up and running, and so all kinds of technical problems. So I apologize for that. But
no worries. We've all been through that one. So no worries. Go ahead.
Yeah, we have, right? Exactly. So anyway, as far as the S&P goes, yeah, for me, everything right now, and by the way, I appreciate all the, I was just hearing some of the previous comments mentioned there, and I did hear them, fortunately, which I think were very good. But just, I'm a technical analyst. And so for me, I do agree with a lot of the fundamental analysis, looking at the news and all that kind of stuff. That makes a lot of sense to me. But I just trade the technicals. And for me right now, all I can say is my technical analysis is all bullish. The daily, the weekly, the monthly, as far as the S&P 500 goes, which is generally considered the benchmark of the equity markets, at least, is all very bullish. So we've had a parabolic move above the previous highs here in toward the end of the last year of 2015, of course. 2016. So yeah, that's moving parabolically up on the monthly chart. On the weekly chart, and pretty much the same. On the daily chart's interesting that we have a lot of momentum going up here, and but 1, 2, 3, I'm seeing at least 3 crossovers of the momentum indicator on the daily chart, which is fairly significant on the S&P 500.
Hey, Barry, if you want to, eventually on that top left, you can share your screen if you want folks to see what you're talking about. That you see that little like green arrow in a screen there. You can share screens if you have anything pulled up. But so your take on the week is higher, lower, and with what percentage?
Yeah, it's higher. Unfortunately, like I said, my laptop which is what I have my main charts on, wasn't operational, so I had to switch over to my desktop in order to connect today, and I don't have my charts on my desktop.
Oh, no worries.
So
okay.
I apologize about that. So
That's
I'm not
okay.
able to, unfortunately, show my charts. So yeah, I'm very sorry about that. I had them all set up and ready to go here this morning. I actually checked them out last night, and I'm like, okay, I'm good to go. And then when I checked in this morning, it's like, it's not going.
No worries.
So I do apologize for that. But yeah, for the S&P, basically my 7-day outlook for from now until Friday is bullish. Everything is pointing to the upside right now as far as technical analysis goes.
So you say by Friday the S&P 500 closes higher. What's your probability of it closing higher?
Correct. So I would say my probability is let's say 6.18% higher.
Okay, that's rather interesting. I'll tell you what, before we move on to AJ then, so let's drop anchor here, because just to give you a heads up, Barry, everybody else, all the other 4 folks said, hey, we close lower, with I think the lowest being AJ with a 0.65 probability that we close lower. So what specifically, what's on your radar for this week that makes you think that we're going to close higher on Friday?
Okay. Well, I'm being a little silly there with Fibonacci ratios, but yeah, basically as I'm looking at my charts, I'm just looking at the trend is up, at least according to the way I measure charts. The trend is up, momentum is up, the cycles are up, just everything's up on both the daily, weekly, and monthly charts. They're all up. So, I'm not just what I tend to do is trade with the dominant energy of the market. And sure, sometimes the dominant energy of the market obviously at some point is going to change. But at this point, it's all moving up. So I have to go in that direction.
Okay. All right. Well, we're definitely going to dig into that in a little bit more because I'd like to engage on some of those things. So, AJ, what's on your radar for the week that's convincing you, or at least giving you a 65 delta that we're heading lower by Friday?
So, as I was pointing out, all my lagging indicators are still pointing up. Very similar to what Barry said, but all these leading indicators are starting to pop their face into saying, hey, look for a lagging indicator that starts to point down, because that's where you're going to take action. Mm-hmm. So I'm actually looking for this weakness. And we had talked a couple weeks back about economic news and how it's just losing its punch, and how instead things like, and I nicknamed them transient external stochastic shocks, like governing by tweet and things like that. And the State of the Union piece is really going to perhaps tip the scales one way or the other. I see that we're in a point of uncertainty and confusion with all these leading indicators popping up, too much overbought. And I think that that's going to be a tipping factor on tomorrow night. And if history explains itself or repeats itself, what's going to happen tomorrow night is a lot of lack of information, which is just going to piss people off and send them on the selling, the profit-taking route.
Mm-hmm. Okay. Don't disagree. Okay. And Anka, what's on your radar for this week telling you we're lower with a 70% probability?
Well, like I mentioned earlier, I'm looking at tomorrow's night's speech at 9 o'clock for more clues in price. And I think that the first reaction we're going to get in the futures market, that is going to tell us that's going to be my barometer as to where as I'm going to lock in some of the profits, some of the positions that I'm still long in, or if I should close those positions and start looking for relative weak stocks or ETFs that have perhaps the probability of running faster to the lower side. So I'm going to take a look at that as well. But all in all, I think that we should be very cautious, especially in today's trading, and even going into tomorrow's trading. I think short-term trading, if you're really feeling the urge to day trade with something that has momentum on your side, look for unique traits, look for runners, look for relative strength stocks that might give you some kind of run to the upside. But all in all, I think, and I agree with Barry, technically we look very strong and we have no reason to short. We don't have a reversal yet in the market, and like I've mentioned earlier, the first area of the reversal that I'm looking at is between 2360 and 2350. That is going to be my reversal area, and I think that once price is going to test that area, we're going to come in. But as long as that support level is going to hold, most probably we're going to still kind of increase the bubble and go higher and higher and higher. And all in all, the thing is that if you start getting in trades right here, it's very, very difficult. It's you're buying a market that is at the very top. You're buying a market that is overly extended. It is extended from any technical analysis, and any technicals that you're looking at will point to an overextended market. And the fact that we're not getting a pullback, we're not getting that sustainable shelf from which the price can jump. So I think that the safe thing to do is wait for let's say, if you're into swing trading, if you're into core trading, wait for a little bit more confirmation that is going to come tomorrow night. And I think Wednesday probably the dust will settle a little bit, and we can look for more clarity in the direction. But even if we pop above, today a new high 2369.18 in S&P 500. Literally, it looks like a breakout. So we had 4 or 5 trading sessions that were topping out at that area. We can't really treat this as a breakout. We can't really treat it as a breakout. It's overly extended.
Couldn't agree more. So a little background on the way I trade. The way I trade, if you've ever seen like an airborne AWACS aircraft, like that big, looks like a UFO landed on an airliner and it's trying to carry it away. There's like 25 folks in the back, all looking at different sources of intelligence, satellite, human, on the ground, listen to radio frequencies. That's the way I trade. So I do have some technical analysis in the back of my airplane, but the biggest, I guess, trading instrument I have is the 7 inches of gray matter, or maybe, I don't know, John's a Marine, he probably has too, between my ears. So whenever I talk to chartists or technicians, the left side of the chart, anybody can tell you what the left side of the chart looks like. Being an options trader is pretty cool because I can tell you the range, what the right side of the chart might be trading in with a distinct probability. And let me just real quick, at TGO, we nailed the Brexit. I got it wrong. I said, I think they'll stay especially after Obama went and lectured them on their own soil. I think that's one of the reasons they left. They felt a little, but we nailed it with volatility trades. This was a Fed meeting right here. Nailed that. And then I was one of the only, besides Jeffrey Gundlach and about 3 other fund managers, to predict not only a Trump victory, but a 5 to 10% market rally, period. Citi came out with a report 2 days before the election that said Hillary wins. If she doesn't, market implodes 5 to 10%. They were wrong. They were all wrong, and we got it right. And then we predicted this sideways trading into the inauguration. And then the same idiots who said sell, market world ends if Trump wins, also said sell the inauguration, didn't they? Citi, Goldman, all said sell the inauguration. There's the inauguration pop. Oh, well, there was a sell moment. That was a stupid immigration crap, whatever. Delete that, slide this over. It was a buy the inauguration. Why am I saying all that? I'm not taking a victory lap. I'm telling you right now, we are heading lower with the State of the Union address. This has all been forward. 2 to 3 weeks ago, when he sat in one of his things and saying, hey, huge tax relief in 2 to 3 weeks, the market had to rip your face off rally. It's already in there. Steve Mnuchin, in his first interview, I know Steve, had dinner with him in New York a couple years ago. He says August. And then the replacement and repeal of Obamacare, even Trump said 2018 if we're lucky. The air is about to come out of these sales, and I'm the guy that couldn't be more bullish on all this. Lower corporate tax rates and even personal tax rates. That's, now finally Apple can bring literally the pot of gold of money they have in County Cork, Ireland, home to either buy back shares, more employees, make an iPhone 19 with a teleportation device. So that's bullish. Steve Mnuchin gutting Frankendot. Whole floor. When I was at Peak 6, we had like a floor of people in the compliance department, man. Are you kidding me? Regulation was killing Wall Street. Now we need smart regulation, not 2008 Wild West crap. I get it. And interest rates slowly going up. If you look in the dictionary of bullishness, those are 3 things right there, folks, that you couldn't be more bullish to have. But this type of this thing right here is getting a little nuts. There's no way in hell tomorrow night he is going to knock the cover off the ball, especially with his friends in the media. If you think he's going to get a kind word other than the folks on Fox, you're nuts. And then it's going to turn into a food fight. I mean, John, you've been over there. I guarantee you this thing turns into the House of Commons. And it's going to be a shouting fest. And I've already read reports that Democrats are planning to troll him during the during the speech. So it's going to look ugly. We're going to get a pullback, just like this pullback right here. This bounce off the election was a, holy crap, is this true? Let's take some. Yeah, I guess it is. This is the hope rally. We hope this guy does what he says. This is the wait and see. And then, holy crap, he's doing it. We are due for a pullback. And real quick, let me get off my rant here. As an options trader, again, nobody knows what the right side of a chart looks like. That's why I'm not these Fibonacci this, cross to that, and pull out your dojo beads. I take a look at the at-the-money straddle for Friday. Recently, as we've been moving flat, Uma Thurman would have to turn sideways to get through the at-the-money straddle. It was like $15, meaning the options market thinks by Friday that we're only going to be in this $15 range. If you look at the at-the-money straddle for this Friday, let me just bring this up real quick. And if you don't know what an at-the-money straddle is or anything like that, don't worry about it. Just hang with me for a second. It's close enough to being the at-the-money straddle. The options market is pricing in a move of about $38. This is the widest. See this little green at the top of the cone here? The options market is pricing it should be about a 60% probability, but I'm using the 2370 strike, there is no 236841 strike, obviously. So the math's a little off. But with about a 60% probability, the options market is pricing in a move that big. That tells me that there's a lot more volatility in this market, and that's historically for the past couple months, this is a very wide at-the-money straddle. It could do it to the up, it could do it to the down. But when we kind of use our brain and knowing that he pulled forward a lot of this great news with all his adjectives and stuff, what's he going to do? Re-say those things he already said 2 to 3 weeks ago? I think we're in for a little bit of a pullback. But here's, you guys, everybody listening to my voice should know what this acronym means. BTFD. And I'll be nice with the F. Buy the frigging dip. So right here, and right here was a buy moment. So underlying economy, and it's funny because Anka, I think you did a great job, or somebody did, of laying out, hey, we got some stuff on the flight schedule this week. We got durable goods today. We got some the Conference Board's consumer confidence numbers. We got some China GDP or manufacturing that could move. I don't care about this stuff anymore, guys, to be honest with you. I mean, I look at it for obviously, being a little facetious here, but a lot of this stuff right now, I don't care about it. Before November, of course, I was looking at all this stuff in the health of the economy. This stuff is really in the back of the airplane towards the back as I just pay attention to tweets, press conferences, CEOs that are coming and going. This really is a different market. So let me get off my soapbox here and say, I think we're heading down for a little bit of a correction, but I would absolutely buy the dip here. If it happens. So with that, let me throw it over to John and see what you have to say about my ramblings, because I know you and I just agree politically on everything.
Well, the rambling is a good description, but I would say one other thing you've noticed in the last week is that volatility has been rising on up days.
Absolutely.
And that's not supposed to happen. And when you do see that happen, it's because the institutions are scared to death of a correction, and they're buying downside protection and even paying up for it when the market's rising.
Well, that's what we talked about, John, with the mad options trader services. Market up, VIX up, something's up. And the something that is up is guys are saying, hey, I'm going to bid this up, but pay no attention to me as I go over here and grab a little vol protection since it's cheap. So, AJ, what are you saying?
Your markets move on surprises. And what surprise has Donald Trump got left for the economy?
That's exactly right.
We now have a time problem in that some of these things may take years to implement. For example, any changes, even if we get a tax bill through this year, which is unlikely, that probably won't apply until 2019 or 2018. And then we won't see the effects on the economy till 2019. And by the way, there's a whole ton of negatives which could be hitting the economy at the same time, which could be taking the market down, like higher interest rates, higher inflation, and more jobless claims.
Well, not only that, JT, I know you and I talk about this over beers often. I think we're also forgetting the strategic picture. There's this little country over to the east of us called China that just decided to add 600 miles to their country and take over half the Pacific. We have a North Korea who's actually poking up at China saying, oh, now you guys are the puppets of the U.S. So we don't even know if China can sit on a guy who's got nuclear weapons that can hit troops in Okinawa and Guam. We have a Russia connection. And what's going on there. So I think there's a lot of strategic events. Look at Iran. The Republican Guard's conducting naval exercises today in the Straits of Hormuz. Controls 85% of the world's oil. So there's a lot of potential. And I know, John, you run in those circles. There's a lot of potential black swan events where something goes bump in the night, man, and you wake up and these futures are down 1,000 points.
Well, we know what the risks are. What we don't know is how Donald Trump will react to them. Okay, let's say there's a terrorist attack on one of his hotels. What's he going to do? Well, the right thing might be to just do nothing, just ignore it, but you won't be able to trace the source of the attackers. He may respond by dropping an atomic bomb on Iran, saying, well, they financed it. And that is what Europe is worried about. That's what China and Japan are worried about, is the unknown of a potential Trump reaction.
Correct. Well, hopefully with especially with McMaster's and some of these other generals around him, there's a little bit of sanity. AJ, what's your take on all this?
No, I've been watching the implied volatilities, the extrinsic value of the option prices, and watching it soar. And that's the piece that I had brought to the table was, it's very typically the relationship is price goes down, IV goes up, and vice versa. Price goes up, IV goes down. When you see them both going in the same direction, it is exactly like you pointed out that folks are hedging. They're hedging against an issue, and you're right, they're hedging both for up or down. And I also agree wholeheartedly with the discussion around the economy right now is strong, for whatever reason, but people aren't paying attention to the fundamental economic news that's coming out there. It's almost like a drama show, and you have to keep track of the drama to see what's going to happen next. I'm going to see if I can share my screen. I might not be able to, but I think I can. I think I can. I've got a quick chart up here. This is just the S&P 500 and the VIX. But one thing that I've also been always talking to folks about is, you've got your ascending channel. You're starting to see hints that it might be breaking out of that ascending channel, but you've got to be patient because it could be just that your ascending channel is getting wide. And it doesn't hurt to have, after some range expansion, a little bit of range contraction and vice versa. So again, I'm going to echo what you said, which is, after the dip, that's a good time to be perhaps looking for a trend continuation type play. And if you're using beautiful option strategies, take advantage of the premium right now.
Absolutely. Barry, what's your take on all this that we've been chewing on?
Yeah. So I'm not a belt trader, but I'm primarily a retrace trader. So it goes along with what you guys are saying here. I'll see if I can share my screen here. I tried to bring it up. Not sure if this is working or not. But so yeah, we've broken out.
Yeah, we're not. I'm not seeing anything yet.
You're not seeing it? Okay. Oh wait, let me see there. Okay. Let's see.
There you go. We got it.
Got it. Okay now. Okay. So as you can see, it broke out. I've got my daily, weekly, monthly of the S&P 500 here. So we've clearly broken above the high of about 229 there, and so both, that shows very clearly on the daily, weekly, and monthly. And everything's just parabolic, what I call a parabolic move, which is a very strong angle of the price action, a very strong angle above 45 degrees of the price action on all three charts. So, that's a very strong move. But on the other hand, if you look over at the monthly chart, the far right chart, you can see that we're coming up to a resistance level there, and that's the 23.6 Fibonacci level. So generally, parabolic moves are not very sustainable. They usually end up being rather, as a lot of people you've talked about, overbought situations. Kind of not a big fan of the overbought, oversold terminology, but still overbought, oversold when you get these parabolic moves tend to be, irrational exuberance, as Greenspan would talk about them. So a little concerned about this. And of course, yes, we have Donald Trump talking tomorrow. It's a very hard market to predict because Donald Trump's so hard to predict. And the whole thing, it's just, we're really in unprecedented territory here with a president that has no precedence, if you will, excuse the semi-pun there. And so it's a very interesting situation here where I think we're in unprecedented territory here that is very interesting. So what I do is I just follow the price action day by day. I literally trade bar by bar at this point.
Mm-hmm. Okay. And Anka, what's your take on what we were chewing on for the week and some of those strategic issues?
I totally agree. We should, pay attention to what's ever going on in the market. But I have to agree with Barry on this one. I'm more of a technical trader. I do listen to whatever's happening fundamentally because obviously we need to know what's happening around us because that's going to have a direct impact on our trading. But other than that, and I'm going to share the screen here. These are, okay, screen 3. I guess this is the one. Right. Let me see if I could get it up. All right, I guess you guys can see it right now.
Yeah.
All right, so these are the technical levels that I'm looking at. And if you recall when we started the session, I said that this is the line in the sand for me as if we're going to go lower. So 2350 area, if we're going to breach this area, then we have a steeper continuation into a minor support area here at 2300. So this is going to be the correction area. Now we're going to look how steep or how shallow this pullback is going to be. But other than that, it is extremely hard. And I'm looking at a 2-minute chart right now. It's like creeping up a little bit, little by little. I was literally shocked to see that at 6 p.m. Eastern time last night, the futures just popped higher. It just popped like 20 points or something like along those lines higher. Is like what? Based on what? And again, I think the market is very sensitive to news, and I think that we've been living in this bubble where everything's going higher, higher, higher. Just promises, a lot of promises going on, and the market has been feeding off these promises. And I think now is the time, probably tomorrow night, to see some real action being that will take place. And I think that if investors, if traders are not going to see this happen in the market, most likely we're going to get the pullback. So this is going to be the area that I'm going to be looking for. If we're going to get a breach over below 2350, if the price is going to slice through that level, I'm going to look for a steeper pullback. Obviously, for short term, I'm going to be looking for some short positions. But like I said, I will evaluate the market one moment at a time, and I will take it one day at a time. Try to lock in profits in some of the active trades that I have on right now. Some long positions. Try to trail them really, really tight. So I'm in emergency mode. Other than, so I'm really protecting my capital very, very hard right now. It's really hard to even day trade. Like I've mentioned, if you're a futures day trader, it's really difficult to day trade because you don't have a good, you don't really have an appropriate risk to reward, an appropriate reward to risk, let's say, rather than that, because you have the market topping out and then you have a very large risk. So either way you put it, even if you're a 2-minute trader, is really tough. Even if you're a day trader, obviously, if you're a day trader, is even tougher. A swing trader is much more tougher in this market environment. And I agree, we need a pullback, a sustainable shelf before we can look at other positions going higher. So the market is really, really topping out.
What's interesting, guys, is I read it over the weekend, but as you were talking, I went through the lower respondent answers on this page. Not one person out of the respondent said for a lower answer, the State of the Union. So it's very interesting to me that we have people talking about MACD, Elliott Wave, time cycles, all sorts of stuff. Nobody. Not one of the respondents said the State of the Union, which is interesting because just about all of us here have all rogered up and said, hey, man, this guy, folks, Trump is driving the market. The fact that the guy knows what an F-18 is obviously brings a tear to my eye since I flew him for 15 years. But the guy is, and we've almost never had a president who talks about, hey, the markets are record high, huge because of me. You folks, if you're not tuned into the politics of what's going on, I don't care which side of the fence you're on, you have got to be paying attention to what's going on here. You have got to watch the State of the Union tomorrow night, because based on some of these lower answers I saw, I get to be the host and tell you that you're wrong. You're wrong. This guy.
Matt, let me jump in here with some insight.
Go ahead.
There is an asymmetric risk situation in the market right now. If we're all wrong and the markets go up, it'll be a very slow grind, like we've seen the last month. If we're right and markets go down, there's a potential for a 1 to 2,000 point drop in the Dow over the next month. So that's called an asymmetric situation. And here's another problem. Donald Trump doesn't know what he's going to do 5 minutes from now. Everything he does is impulsive. It's not based on research. He isn't reading staff reports, intelligence reports. You know, with the last 8 presidents, call the White House, talk to their staff and say, hey, you know, if this happens, what's the president going to do? And they could tell you with absolute certainty what the policy would be. With Trump, first of all, you can't get to the White House staff. They're not talking to anybody because the staff is so far outside of the traditional establishment in this country. And second, the staff doesn't know what he's going to do ahead of time. These tweets are just as out of the blue for them as they are for us. So it creates a very, very high-risk situation in the markets. You know, you say markets are all politically driven now, but nobody knows what's going to happen next. If you've made good money so far this year, like we have, it's a great time to cash in and go with 100% cash. You know, sure, McMaster's is a great guy. If he were president of the United States, I wouldn't worry about the geopolitical situation because I know he'd do the right thing. But he's not president. He's only, you know, chairman of the National Security Council. And also on the National Security Council, you have Steve Bannon, you know, who's some kind of nutcase. So we don't know which opinion Trump will listen to, you know, the experienced professional or the, you know, the internet conspiracy theorist. So there's my rant. I
couldn't agree more, man. And so running a little behind. So here's what I want to do. I always like squeezing out in the last 15 minutes here. We'll go Barry, JT, AJ, and Anka. Barry, give us whether it's a short term today, tomorrow, 6 months, or 2 years from now. What's a nice looking trade or a sector you're looking at or a trade you have on now that some of the folks listening could go take a look at? What do you like?
Sure. Well, happy to do that. Thank you very much for the opportunity. So, you know, all my indications are to the upside. Let me pull up my screen share again real quickly here, see if that'll work here. So I pulled up my monthly chart, and since we're just talking about a week here, and everything on the daily, weekly, and monthly is all to pretty much to the upside. The only concern I have, well, there's 2 concerns I have. Number one is you'll see the resistance there on the weekly chart. That's a Fibonacci ratio. So I'm concerned about that. We're right smack dab into that Fibonacci ratio of resistance. Number 2, look at volume. Isn't that interesting? Notice how we've been going up on praise, but going down on volume. So the volume bars are there, but then also the moving average of volume, the black line, has been moving down. So we're moving up on less volume. So I have to say that concerns me a bit. It really does. And so, you know, again, yeah, we've got a president who, wow, who the heck knows what this guy's going to do? It's crazy. It's fun. It's entertaining. It's interesting. My technical analysis generally is to the upside as far as stochastics, momentum, trend, all of that. But then when I look at resistance and I look at volume, it's counter-indicating the other indicators. So it'll be interesting to see what happens. But I'm seeing a mix of indications here. So it's really a mixed signal.
All right, roger that. Thanks, Barry and JT.
You know, I pretty much had my say. Falling volume in a rising market usually is a death knell. This time we're in unprecedented. You know, if anybody but Trump were president now, I'd be shorting the daylights out of the market. But right now, 100% cash looks really good. So I'm going to stay there. If we go higher, then I'll short it. If we go lower, then we'll buy it. You know, it seems like the markets want to discount the benefits of Trump policies first and the costs later. So I do think we're in a long-term bull market still, even though it's 8 years old now. We could get another year or 2 out of this before we then get a major crash. By the way, another one of my side bets I have with people is that not only will unemployment be higher by the next election, the stock market will be lower. but we may have to go up 30% first before we turn around.
Well, yeah, exactly. That's the point. We might have, we might see this rip your face off rally continue, and then
and that's where we make our money, is on the next 30%.
Correct. Exactly. Okay, AJ, what's on your? This is a great trade radar.
Right. I'm trading premium. So that means I want to be selling this extrinsic value, this high implied volatility, and I'm going to be trading it on the top side, which means that I'm expecting the market to either go sideways or go down. And in either case, I'd be able to pull out some premium or pull out some profits from that. So that's kind of my overall sentiment for the next month or two, is to be trading premium, but trading it on the top side. Not ready, like I'm with John, I'm not ready to short it. I'm not ready to jump onto a rally at this point. Instead, I'm going to be selling that premium as much as I can. Okay,
and Anka.
All right, like always, I have a stock on my radar. I usually do a lot of scanning throughout the weekend, and I'm going to share my screen right now. Okay, that was not me.
Sound like you were going back in time or something.
Yeah, it was not me. It was not me. All right. So what I have on my radar, actually, I do have about 6 to 7 stocks that are on my radar. But this is one of them that is quite interesting, with the correction into a minor support area at 72.80 area. And this trigger right here, and this is a daily chart. This is for a swing trade. As long as the support level holds here at 72.60, I would say a pop over 75 and change could bring it back to the $80 area, and this is like for short to medium term, what I'm looking at. So this is the one thing that I have on my radar right now.
Western Digital. Okay. Well, there you go. All right, folks, my turn, and I'll probably sound like a broken record to some of you, but it doesn't matter because the trade prints money. John alluded to it earlier. It's Goldman Sachs, folks. I like to say I have a position in ExxonMobil because Rex Tillerson, our Secretary of State, is he was there for what, 45 years, CEO. ExxonMobil ain't going out of business anytime soon. They're supposed to double earnings this year. But Goldman Sachs, folks, like I said, it doesn't matter if Goldman Sachs is trying to throw a blanket on this rally now. 4 of their heavies are in the cabinet or senior advisors or working on tax relief. So we recommended Goldman Sachs September, October, November. We have 3 of our members who got in the Goldman Sachs September trade. A couple of them did 20 contracts. They're up $145,000 on one Goldman Sachs trade that we recommended. I finally got filled on one in December, and it's up about 11 grand with 5 contracts. Hey, isn't it overextended? The answer is no, folks. I still think Goldman Sachs is cheap. If we got a little bit of a sell on the Trump tomorrow night, it's a perfect time to get in here. Goldman Sachs, I think John, you said it's $500 stock in a couple of years, easy. Yeah. Goldman Sachs, Twinkies, and Roaches will survive the next nuclear war, and I guarantee you Goldman Sachs financed it and is paying for the rebuilding. So Goldman Sachs, and then we're looking at I have a Gen 19 trade on. That's the beauty about options, folks, is I put this on last month and it's up $2 grand. So these trades are averaging about $2,000 a month. You can hop in your time machine, go as far out in time as you can, the Gen 19, and get bullish. We buy deep in the money 80 Delta calls. We buy some disaster puts to kind of limit our risk. And then we sell front month upside calls to bring in premium, kind of like AJ's doing. And it's a great trade. Love it. My final one that I'm going to love that I've been a hold recently, one of the fangs, is Apple. I'm no big Warren Buffett fan, man. The guy's one of the biggest hypocrites. He sits there and he was Obama's tax boy for a little while there until he inverts and takes, Burger King up north to Canada. He's like, what are you, stupid? I'm no idiot. Oh, but you make less than your secretary. All that crap annoyed me. But the fact that he just jumped in with both feet in Apple, it's like Carl Icahn getting into AIG here. When you see one of these heavies go in there, you can be a little, that remora fish on the shark. Trading flow, these guys don't like putting a lot of money on a table and lighting on fire and giggling and clapping their hands. They want to put their money and see it go to work. I think Warren Buffett sees that Apple's going to bring a lot of coin back and do good things with it. I'm not a super Apple guy. I'm an Android guy to begin with, and I don't think Tim Cook is any Steve Jobs by any stretch. But we're going to, my next live trade brief this week, we're going to get long out to Jan 19 on Apple. So those are my meaty ones: Goldman Sachs and JP Morgan. I do like JP Morgan and Apple. So, all right, guys, I'll tell you what. Let's wrap up real quick. Let's go top to bottom. Barry, JT, AJ, Anka. Where can we get a hold of what you currently do, or get a hold of you, Barry?
All right. Well, thank you for asking. By the way, I love your analysis there. I agree with it 1,000%. I think that was, frankly, that was one of the best analyses that I've heard in a long, long time. So good job there. That. No, seriously, it's yeah, I'm counterintuitive to what a lot of people are saying. But anyway, as far as what I offer, I'm offering a free trading course right now to people on a limited time basis, just to get a feel for, what I have to offer, so people can try it for free and see if it resonates with their mindset, and if it, resonates with their brain cells and so forth. And they can get it at topdogtrading.com/free.html. And it's a free 5-day mini course, 5 videos. And the topic of the video course is how professionals trade differently than amateurs. So retailers definitely trade differently than amateur traders. And, the markets, retailers trade basically on a herd instinct, which is normally wrong. And the professionals, we have to trade counter to that herd instinct. So I wrote an article many years ago saying that professional trading has to be unnatural. And that's because our natural instinct as human beings is we are social beings, and we are social beings, meaning that we trade with a herd instinct. And so professional traders trade differently than that. So this 5-day video course, each video is about 20 minutes long, and it talks about how to trade counter to the herd mentality, and therefore to be professional. And again, it's topdogtrading.com/free.html. And that's something that I'm offering absolutely free to everybody who's listening to this broadcast.
Awesome, Barry. Appreciate it. Look forward to working with you again. JT.
Hey, you can go to www.madhedgefundtrader.com. We have all kinds of free stuff on our site, and register with us. We'll send you a link to do that shortly. And periodically we send out offers to subscribe to our service for only $497 for 3 months. That's compared to the online price of $3,000 a year, or $5,000 if you want to get our Mad Options Trader service. Again, madhedgefundtrader.com. We're averaging about 37% a year. If that's good enough for you, sign up. If you want to make more than that, then you have to go sign up for Matt's service.
Exactly. Nice subtle plug there. Yeah, absolutely. John and I run a great team here. He trades a lot of stuff I don't, and we're pretty good wingmen there. So absolutely, you can trade with John and I. So reach out to him and find out. AJ.
AJ can be found at tradingtrainer.com. So the TradingTrainer.com. There's a couple of webinars that we do weekly that you can register for there. And then I want you to keep an eye out, everybody, for our 6% protocol that's launching in a couple weeks. So that's just at 6percentprotocol.com. And check that out, because that's all about what we're doing right now with selling that premium that I've been talking about.
Good idea, man. Great idea. 6% protocol. Look at it, folks. And Anka.
Okay, so you can find me at tradeoutloud.com. We offer trading education for swing trading stocks and for day trading futures. And this is basically what I'm doing. I'm only trading 2 hours a day, day trading futures. And for the rest of the day, I'm just swing trading. So basically, I am just monitoring my active trades. And if you're interested in our education, you could visit our website. It is tradeoutloud.com. We have transparent track records for both day trading futures, and also for swing trading stocks. And if you're interested in trying our future signals, you can shoot us an email, or I'm going to post it right here. This is the link. It is tradeoutloud.com/futures alert. We are doing a $5,000 account challenge. We started the account at the beginning of the year, and so far we need about $500 or so to double up the account. And this is what trading only with one contract, not even position sizing. So this is for everybody, for anybody that wants to get their feet wet in futures trading, for everybody that has a little bit of knowledge about futures trading, a little bit of education. They could follow our signals. We are very conservative. We are really into protective mode at all the time, and we put our capital first before venturing into any trade. So if you're interested, you can go to tradeoutloud.com/futures alerts to find out more about our future signals.
Awesome, Anka, and looking forward to moving down to the warmth here and working together.
Yeah.
And finally, folks, Matthew Buckley, callsign Whiz. Like I said, you can head to topgunoptions.com. My marketing department was huge when I started this company, obviously. So I graduated from Top Gun. So threw the options on there. If you're a skier, scroll down a little bit and you'll get what this is: beginner, intermediate, advanced. 3 types of options, folks, like my Marine buddies, like John, who doesn't even know how to spell the word options, all the way up to if you're trading reverse straddles with a butterfly covered call twist. I made that up. I have no idea what that is. We have the service.
I was wondering what that was.
I don't know. I'll try that later. So we have a retirement portfolio. We have a portfolio that trades the front months and also out to Jan 19, and then the advanced also throws some weekly options in there. It's not that they're advanced. It's just they're a little bit of a shorter time period, so you gotta be a little bit on your toes. So just a 2-week test flight into those. You can go to topgunoptions.com, and we should be good to go. So, all right, folks, thanks for coming. Another great roundtable, David. So I'm going to throw it back to you, and thanks for having me as the host, and looking forward to working with you again.
All right, thanks everyone. Great show. Just want to remind everyone watching to be sure to hit the YouTube subscribe button so you can get updates on future shows. Also, you can go to TimingResearch.com and download any of the past reports or watch any of the past shows there. I've also been posting the audio from each show for the last few weeks in MP3 format. So if you want to download it and listen to it as a podcast, that is available now. Be sure to join us next week, March 6th, Monday at 1 p.m. again. Mark Dannenberg, Fausto Puglisi, Simon Klein, Jim Kenny, and Rob Hanna will be on that show. And just want to thank all my guests again for this one. Barry Burns of TopDogTrading.com, John Thomas of MadHedgeFundTrader.com, AJ Brown of TradingTrainer.com, Anka Metcalf of TradeOutLoud.com, and of course Matt Buckley of TopGunOptions.com. Thanks, everyone.
Thanks, David.
Thanks, David.
Thanks, David.